If I could draw some parallels to real estate, investing in the stock market is kind of like real estate long-term buy and hold. And then if you're talking about trading, it's kind of like flipping properties. You really have to know what you're doing, right?
Absolutely, yeah. That's a great great way to look at it. A lot of people who do wholesaling properties, you need to know all those different things. You have to factor in your repair costs, your taxes, and that's a full-time thing. Where once you get out of a deal, you're looking for the next deal, right? Same thing with trading. When we're out of a trade, let's say we bought a Tesla at $106 or $120, goes to 300, we sold our profit. Now that's like we got out of the property. Now we're going to look for the next property. So yeah, I think that was a great way to frame that.
I'm Garrett Wong, and this is the Investing to Win podcast. How do you define success, and what does winning look like for you? Anmol, welcome to my podcast.
Thanks for having me. Looking forward to chatting with you.
Absolutely. So rather than me reading out a big, long, boring bio, I want to actually have you introduce yourself, and then we can sort of get into the topics at hand. So why don't you give us a background?
Yeah, definitely. So I'm a stock market trader and investor in the financial markets. I've been doing that since the last 14 years. And then, I got into trading psychology because I realized that's an area that a lot of people lack, or that's one of the reasons why most people don't make it. So now I'm also a coach. I help different hedge fund managers and other traders and investors dealing with their psychology and behavioral issues that come on the line when they're risking high amounts of money. And also author of the book, Prepping for Success, 10 Keys for Making It in Life.
Very nice. Okay. I think this is super interesting because, as you know, the Investing to Win podcast, we have had crypto on here, obviously a lot of real estate. Really interested to hear about your take on the markets, but let's go way back here. I know that through your bio, I read your one sheet. Maybe share a little bit about your early life, like right back to, Delhi, India, and what initially drew you to even going to school in London.
Yeah, so I grew up as a very like sort of shy, introverted kid. Sort of just sticking to myself with my Xbox, and doing that for like a pretty much my all of my teenage years. But then I always kind of had a desire to do something and be something, but I always felt like I didn't really fit in or I belong in India. So for me, it wasn't that I wanted to go to London. I just wanted to get out from where I was so I can just start somewhere fresh. Nobody knows me. I can be whoever I want to be. I can create my identity. So that was partly one of the reasons that I wanted to move out. And I wanted to actually come to the US first. But then, there was like SATs and all these requirements that you had to meet. And whereas England, you don't have a lot of requirements. If you can speak good English, you're good. So I got in there and I used that as an opportunity to sort of, work on myself, on my communication skills, to meet new people, just put myself in a different culture, outside of my comfort zone. I think that was partly the reason that I moved there. And being an introvert, stock market was a great thing because all you had to do was just turn off the Xbox, turn on your laptop or computer, and you could still be doing your introverted things on the computer. So I always wanted to find a way where I can make money on the computer and I don't have to deal with the office politics and all the corporate jargon and all these people office politics. I didn't want to deal with that. So I think that's why I took really early on to the stock market and got really curious about it, got really fascinated with it. Why do stocks move up and down the way they do? What controls that? What causes that? And I think that what really drew me into this markets.
How old were you when you started even thinking about the stock market?
I was 18. I was in my dorm room, just sitting there. And like, back in the day, there used to be these webinars and all these things I used to attend, just to try to learn. But then pretty quickly, I realized that a lot of it's like marketing. A lot of these people are, selling programs and stuff, but they might not be trading. So a lot of my, I think, first year of trading was just finding like the right style, right methodology, or the right mentor. And I think, yeah, so I was 18 years old, just in my dorm room, started researching on the subject, reading books on it, buying courses on this thing. And I really got fascinated by it. I always wanted to figure it out, like a problem solving. Why does this stock does this? Why did it not do that? And I think that what really drew me into it.
Well, I know when I was in university, I was living off craft dinner and instant noodles. How did you even get started? Don't you need money to invest in the stock market?
Yeah, so I borrowed money from my dad. He gave me roughly $10,000. He's like, "Here you go. You're off to college. Do whatever you want with this, right? But this is what we're going to help you with. This is the extent of the help you're going to get. And now, whatever you do with this is up to you." And then I told him I'm going to start trading the stock market. And Indian parents are very conservative, so they were always like, "Oh, this is going to be a great lesson for you. You're going to lose all of it. Maybe a great lesson to not gamble in the markets." And I did lose pretty quickly. I think half of that, like in my first few months, I lost half of the money, and then I wanted to make more money. And I was just like, I got really good at like researching and writing and researching the markets. I just hadn't figured out my mindset or my psychology, and that's why I kept losing over and over. So I didn't have risk management. So I lost half of that money pretty quickly. But then I wanted to build that half back. So I started writing a blog online, just like my thoughts on the stock market. Back then, I wasn't even like actively trading. I just had a few stocks that I put the money in, but I was writing articles on it. And then I got hit up by like Yahoo Finance and all these people saying, "Hey, your articles are pretty good. Do you want to publish for us? We'll give you, $500 or $1,000 per article that you published back then." And then that's when I started like building my capital by writing articles online and get
Nice.
my the money that I lost, build that back. And that's why I tell people, never read anything you trust on, never trust anything you read online on Yahoo Finance or Motley Fool. It's probably written by a college person like me. So, I would tell people, don't read online articles because they pay, college students like me to write those articles. And I was like, oh, if you're going to pay me 1,500 an article, I could write like 10, So I wrote a lot of articles, got my capital back to 10,000, and then I started trading properly with that money.
You're doing research. You're becoming, I guess, more of an expert on this, and then you're still doing this within your dorm room. What did you go like? What were you studying at the University of London?
I was studying business and management. So business degree, nothing to do with trading or investing. But then what helped me was in college, me and a couple of friends, we were both really interested in the stock market. So we said, there's a gap here. If you're an entrepreneur, there's like an entrepreneurship club you can join in college. If you're into basketball, you could join a basketball club. Any interest that you had, there was a club that you could get into. So we said, why don't we start like a trading and investing club? Like none of us know anything, but why don't we just meet up like once a week and chat about maybe a book we read or something we learned, just share ideas. And that's how we really started developing. And now, 20 years later, it's still a thriving club and society with hundreds of members. And we started that back in the day.
Wow, walk us through for the novice because I've never. I think there's kind of two mentalities out there. At least I know I am. I mean, you either like to invest in real estate, bricks and mortar, things you can touch. To me, the stock market's scary. So why don't you demystify it for the audience a little bit? Like break it down to basics.
Yeah, I think by the way, everybody should have like the one core, style. So like a lot of people in real estate, they will have their real estate investments, but they'll also invest on the side with the stock market. But the real estate's kind of their main thing. So I do real estate too. I have like 9 Airbnb properties. I have tons of other things involved in real estate that I do. But the main thing for me would be trading, and I make the income from that. And then I take a percentage of my profits, and those get invested for like the long term in different stocks or real estate or things that I might do. So trading and investing is a little bit different. When you invest in the stock market, you're typically hoping, well, not hoping, you're trying to get the market returns, whatever the S&P is up or whatever the Nasdaq's up, and you're not really looking at the day-to-day moves. If you are, you're investing incorrectly. As an investor, you should not care what the stock's going to do tomorrow or next week or even next month or even next year because you're holding it for 5, 10 years. And the fact is, the stock market is always higher than it's ever been in every single 10 years. If you take any 10-year period, the stock market's always higher than the last 10 years. So if you just use that, then it's a great long-term investment that beats inflation. That tends to even beat real estate for the most part. Obviously, real estate has its tax advantages and benefits that stock market might not afford you. But then trading is different. Trading is where we're looking to get in and out. We're trying to capture those small fluctuations, right? And we're typically doing it with larger sums of money, right? But trying to capture these small moves because they end up adding up. Now, trading is an actual skill. That's like another job. So I don't recommend that to everybody because it's not for everybody. It's like a skill. It's like another job. And just like any other job, you have to have a learning curve. You have to go through a lot of pitfalls and you have to have a developed strategy and a system. Just like I wouldn't go in, compete in the F1. First, I'm going to learn how to do go-karts, right? So same thing with investing is something that everybody should be doing. Take a percentage of your income, take a percentage of your real estate income, and just put it in the stock market. Typically, that would give you 10 to 12% on an annualized basis over like average 10-year period. And that's a great way to invest. Because with traders, we're obviously looking to get way better returns in the market, but to get those better returns, we're also taking risk.
Okay, so if I could draw some parallels to real estate, investing in the stock market is kind of like real estate long-term buy and hold. And then if you're talking about trading, like you said, very specific knowledge, it's kind of like flipping properties. You really have to know what you're doing, right?
Absolutely, yeah. That's a great way to look at it. A lot of people who do wholesaling, properties, fix and flips. Now that's a full-time gig. You need to know the after repair cost, market value. You need to know all those different things. You have to factor in your repair costs, your taxes, and that's a full-time thing where once you get out of a deal, you're looking for the next deal, right? Same thing with trading. When we're out of a trade, let's say we bought a Tesla at $106 or $120, goes to 300, we sold our profit. Now that's like we got out of the property. Now we're going to look for the next property. So yeah, I think that was a great way to frame that.
Okay. So for somebody who's starting out, I mean, let's say that I just want to start investing. I mean, I'm assuming, to my knowledge, I'm just going to try to find a broker or something, or where do you recommend starting? Or maybe that's where you come in for coaching, but go ahead.
Yeah. So I think for investing, I'll tell you, nobody needs coaching for investing, right? Just don't even try to pick individual stocks. Open up a brokerage account that's similar to TD Ameritrade, Thinkorswim, Charles Schwab, Fidelity. There's so many different brokers. I personally use Interactive Brokers. So that's a broker you can open an account. And then you just pick funds. So like S&P 500, QQQ, which is the NASDAQ, right? Or VTI, which is the Vanguard Total Market Index. Now that is a basket of stocks. So that way you don't have to buy Apple, Microsoft, Amazon individually. You can just buy the NASDAQ. You're going to get the top 100 stocks. And basically, it's almost like investing in Apple, Microsoft, Google all together as a basket. So for most people, they should not be picking individual stocks. They should just be investing in the markets and getting your 10 to 12% every year. And that's a great way to invest. Trading is when you do need coaching. You need to know what you're doing. You need to know how to read the charts. You need to know how to manage your risk. You need to know your portfolio allocations. You need to know, risk management, and more importantly, your psychology, right? Because when stock goes down, you should be getting out and taking a small loss as a trader, not holding on, hoping it comes back. Because now you're going into an investment territory, which is what a lot of people end up doing. When the stock is going down, rather than getting out and taking a small loss, they'll keep holding. Maybe it'll come back up, and hope is not a strategy.
Okay. So what is it that you specifically coach then? You mentioned mindset.
So I coach two types of people. One of them, obviously, I coach them on trading and investing, chart patterns, analysis, technical analysis, options, how to use options in your trading correctly, and the different aspects that go into the technicalities of trading. But then with the hedge fund managers and my bigger clients, I help them with the psychology aspect because they already know what to trade. A lot of them are way bigger traders than I am, right? So they don't need to learn how to trade. They know that. They just need to know how to manage themselves when they're in the trade. Because when you're risking hundreds of millions of dollars on a position, it could really affect you, right? And we saw that in the dot-com bubble. We even saw that in 2020, 2022, when the markets dropped 35%. A lot of hedge funds were down 60, 70%. They were taking tremendous leverage and they never saw that coming. So with them, I talked to them more about the risk management part of it, the systems building, right? Knowing when to get out of a position, and then not trading emotionally, right? Not going on a tilt like they say on poker, like remaining calm in the position and following a system, and that system has to be back tested over the last like 100 years, so you know exactly what to expect on that system. So those are the two types of traders that I coach. The retail people, which is like average day-to-day people, I coach them on actually how to trade and kind of make a living right off this as a career. And then with the hedge fund guys, I coach them more on systems.
Speak to me about just the mentality, the fear. I mean, it's one thing to be investing your own money into whatever funds, but as some of these bigger traders, I mean, what goes through their mind when they've got, again, hundreds of people, thousands of people's money in their hands?
Yeah, I mean, it's a lot. It's a lot of stress. It's a lot of emotion, and it's a lot of like it brings out the best in you, but it could also bring out the worst in you, right? And I think a lot of people like this hedge fund Skybridge was, there was 60 something $billion hedge fund that lost 60% in 2022 when all the crypto went down because majority of their funds were leveraged in crypto. So for them, what goes through their mind is obviously disappointing their investors, right? Or investors always asking, how's my funds doing? They got to be answerable. They got to make investor reports. So it's a lot of stress. And, I'm happy just trading my own money because it's like, hey, if it's stressful, it's only stressful for me. At least I'm not. There's a lot of element of disappointing because all these guys mean good. They're all well-meaning hedge fund managers, right? They want to do well. It's also competitive nature. They compare themselves to other hedge funds. They compare themselves to the markets. So if they're lagging behind, that could take an emotional toll on you as a person. So for us, it's like, okay, let's look at the bigger picture. Let's not look at the bad year that we've had. Let's look at how we've done over the last 3 years, 5 years, 10 years. And then that gives you a little bit of perspective on how we're actually doing. And if the last 3 5 years is still not looking good, then you got to reevaluate your strategy. And I think that's something that Kathy Wood of ARK Invest might need to look at soon.
So it's funny. I'd say my largest company right now that I have is the property management company. We manage third party properties on behalf of out of town investors. Call it a single family home, and if I don't collect that rent, obviously my investor, my client, is very unhappy with me. But that blame game, you can kind of tap dance through that a little bit and manage those relationships. What kind of anger is there when a fund manager has something that they've chosen through no fault of their own, and then it tanks? What happens, and what is the how angry are people?
Yeah, I think more than anger, like the thing that kind of destroys a lot of people is the ego of like not wanting to admit that you were just wrong, right? Because nobody's ever going to be right all the time. Even with properties, there's going to be some properties you're going to buy, you thought they're going to be a good flip, but they ended up not being a good flip.
100%.
Or you, yeah, or you bought a property and you discovered, oh, this major repair that needs to be done on it. Same thing would happen with stock. You might have a thesis of an investment, but you're going to be wrong. And I think admitting that is the biggest thing for people, because hedge fund managers, they make billions of dollars, right? There's an ego with it. No, this position is going to be great. This company is going to be great long term. We just got to wait 5 more years. I'm like, but that's not fair to your investors. Wait 5 years, because guess what? They're not getting paid. You're still going to collect your management fee. So also like bringing integrity into the business is another thing that I focus on. Is like, sure, you're going to collect your management fee, but what about the investors that trusted you? So if you're wrong on a position, you need to be able to take that ego out and say, okay, hey, we were wrong on this one. And now, because there's also opportunity cost, you might stay in a position for 5, 10 years. Maybe it'll come back. But what if that money could have been better used towards a different position? What if you took a small loss here and put it in something else that might have had a better opportunity cost over the next 5 years to make a comeback or return for the investors? So I think more than anger, there's a lot of the ego in this space, competing hedge funds too. Some hedge funds might be short a position betting against it. Some might be long against it, and they get into this sort of ego battle. And what I coach them through is just like, hey, let's remove, because market doesn't care. Market doesn't care about you. Market doesn't care about me. Market doesn't care about anything. Market has no ego. So you can't have or bring your ego into the marketplace. The market will humble you.
Is it well received when a manager says completely transparent, hey, you know what? I made a judgment call, it didn't work out. How do you go about, like, does it really destroy the trust with all of those clients, or does it come back?
I think clients will more trust you when you're able to admit you're wrong in your investor reports. So if you're just going to say everything's printing a rosy picture, at some point people are going to see the truth and they're going to realize that you're full of it. There's so many hedge funds out there that are on CNBC all the time, but you look at their actual returns, they're actually underperforming the market. So why are you going out there talking about this expert, like knowing everything about a stock or a company, when clearly over the last 5 years are underperformed? So you got to admit that you don't know everything. Nobody knows everything, right? Nobody knows anything. Nobody knows what the stock's going to do. It's all about building systems and you're having your statistics in your favor. So you got to learn how to be the casino. Like if you go to a casino and you end up winning a massive hand, casino's not going to mind. In fact, they're going to be like, here's some more free drinks. Keep playing, because they know their long-term edge. The more you keep playing, you're going to
Right.
come out ahead. So if investing is the same thing, is take your ego out, get into the next position, get into the next investment, get into the next trade, and let the odds play out over time. And I think that's the biggest thing to realize. And that's the same thing for individual traders too. Traders like, me, traders like other people who are just trading for themselves, like knowing when to cut a loss, get out of a position, and also knowing when to cut out of a winner too. And I think a lot of people miss that point. Like in 2020, we saw all these stocks, Zoom at $500, Coinbase over 500, all these stocks like up 5, 6,000%. And nobody ever sold any of those things. And now look at them, they're down 95%. So learning how to get out of a winning position is also just as important as learning how to be in a wrong position, because the markets always are ahead of what you think. So sometimes people say, "Oh, I think Tesla is a great company. It's going to go to, $500 a share over the next, let's say, 5 years." But sometimes it gets there within 1 year. Market, front runs it, gets in a year period. Now, don't say it was a 5 year investment, so I'm going to hold it. If it hits your target, you should be taking profits. And I think people missed that big time in 2020, where these funds were up a huge amount of money, but they never sold anything. And now those positions are back down and they're down 90% on them.
But I mean, how do you know? I mean, for me, I would go, oh, I'm going to trust my gut. Well, I mean, that never does me well in real estate. So, I mean, what do you do? How do you know when to get out?
First, before you get into any trade or investment, you should already have your exit points defined. If I buy
Fair.
Microsoft, let's say at 100, if it goes down to 90, I am wrong. I'm going to get out and take a loss. If it goes to 150, that's my profit target. And when it gets to the profit target, not second guessing yourself. Maybe it's going to go higher. Maybe it'll come back up. Following your plan. So whenever we put a plan in place, we got to have integrity in that plan. Meaning, do what you said you're going to do it when you said you're going to do it. So having the exit points predefined, so when it actually happens, there's no thinking involved. Because problems with any investment happens when your thinking is involved, right? So eliminate that by already setting parameters beforehand. That's number one. And number two, learning how to read the charts. Charts are the charts. They always foreshadow what might happen. Now you might be a little bit early, you might be a little bit late. You're never going to pick the top or the bottom, but as long as you get out of the right point, at least you're going to eliminate the meat of the down move or the meat of the up move. So I think chart reading is extremely important. We could go back and take a look at multiple charts from 2020, and they all look exactly the same. And those are the patterns that we've been studying for the last, they've been around 50, 100 years, longer than I've been around.
Okay, so you're really turning an art into a science.
Yeah, it's a mix of art and science. It's never fully scientific, but there's an art element of it. But then you add odds to it. Like I already know if I take, let's say, 10 trades, I'm going to win, let's say, on five or six of them, and there's going to be four that I'm going to lose, right? But what I try to do is I'm try make my winners bigger than my losses. That's how this trading thing works. Is like I could, let's say, take 10 trades. I could even lose on six of them. So let's say I lost on six of them, but I win on four of them. But the four of them are, let's say, twice the size of my loser. Net, I'm going to come out ahead. So for me, it's just about churning and taking more trades because I know at the end of 100 of them, even if I win 50-50, but the winner is twice the size of my loser, statistically, it's impossible for me not to make money. So I think that's where the science part of it would come in.
Okay, and then obviously not having regrets because you got out of Microsoft 20 years ago and it keeps going up and up, right? You have to
Yeah.
be proud that you made that decision and you stuck with it.
100%. Like I got out of Nvidia, like beginning of this year. I wish I was holding it, but that's part of the strategy because I've utilized that money towards other positions and other trades, and so you can never pick. You can never pick the top. You can never pick the bottom. You might pick it once in a while, get lucky on it, but it's not a long term strategy. And yeah, you should never have fear of missing out. You should never have regret of missing out. And as I always tell people, it's like I'd rather be out of an investment wishing I was in than being in and wishing I was out.
True. And otherwise, it truly does feel like gambling and racetrack type stuff, right?
Yeah, there's a very fine line within trading, investing, and gambling. There's a very fine line, intelligent speculation, and you got to walk that very tightly because emotionally, if you're not in a good place, it's very easy to tiptoe into that side and start risking more money or risking beyond your means and not having a risk management.
Okay. Long term and short term, one of the questions I had prepped to ask you was about how you prepare for or the differences between, you've kind of already answered long term investment and then trading. I mean, would you classify that statement of short term investing as just trading, or are there other aspects to it?
There are three different styles for me. So there are actually two buckets, and then there's three different styles. So two buckets are income producing and then wealth building. So income producing is where we do the trades, right? That's actively trading in and out. The goal is to make an income, right? And then there's wealth building style. Wealth building style is where we're investing for the long haul and we're typically not looking at our stocks every day. And what I also do is I merge those two buckets, meaning so I'll trade every day. I'll trade for an income. That's what I live off. That's what I pay my bills, right? Because investing is not going to pay my bills because that's long term. So trading pays the bills, and then you take a percentage of your trading profits, and that you invest for the long haul on something you might believe in. And then there's three different styles to it. So one is day trading. That's an income producing style. That's where we're getting in and out of stocks every few minutes, right? I might be in it today. I might be out like 10 seconds later, capturing those smaller buckets of moves. And that's day trading. That's a skill. That's a profession. That's not for everybody. And then there's another style, which is a fine balance between trading and investing, which is swing trading. Swing trading is where I might buy a stock today, might sell it next month, or might buy it today, might sell it next week, capturing those smaller pockets of moves, right? Capturing those swings, and that's why it's called swing trading. And swing trading can be both income producing as well as wealth building, right? Because it's a typically longer than just getting in and out every day. And then there's investing where you might hold in a stock to 5, 10 years. So that's the three different styles that I utilize.
Okay. No, that's great. Just going back to your university days, you're writing for all these publications, probably feeling pretty good about yourself and this, probably being very successful in your trading as well. What did that play towards your term ego, and did it help or hinder you as you started to expand your portfolio?
No, my first year was extremely challenging. Like I lost money my whole first year of trading because it's like I had the systems down, I just wasn't following it. You know, like it's a saying, right? If you give a man a strategy that is sure to make him a millionaire in 10 years, in the hopes of getting there in 1 year, he's going to tweak it, optimize it, mess with the strategy, and not get there even like 10 years later. So for me, a lot of the first year was just me getting out of my own way, right? Realizing that cutting my ego, nobody knows anything, right? There's no holy grail to trading. There's no thing that's going to work all the time. Because the first year, we all think we are smart. There's a trading robot I could buy that might get me the returns, or there's a guru I can trust. If I just follow his stuff, newsletter, I'm going to make the money. So first year is a lot of making those mistakes and realizing nobody has the answers. So the second year is when I turned the corner, when I finally found like a good mentor. He taught me how to get involved in the markets, and I started trading for a prop firm in New York City, even though I was still in my dorm room. So the prop firm gave me a lot of the good fundamentals, because in the prop firm, you're trading the company's money. In exchange, they take 30% or whatever off whatever you make. Now, I worked for them a long time, and they had forced risk management, meaning if I lost an X amount per day, my platform would just lock up. It wouldn't even allow me to trade anymore. So that I think was great, because when you're losing is when you make the big mistakes, and when you were losing, they just cut you off. Come back tomorrow, or if you'd have a max loss for the week, hit a max loss for the week, you can't trade anymore. So even if you hit your max loss on Monday, you got to come back next Monday. So I think a lot of those forced risk managements is I think what I attribute a lot of my success to, because I built good habits, and I never got to a stage where like a lot of the horror stories you hear of people losing money, blowing up their account, having to start all over again. For me, a lot of that was eliminated by trading for another company and having that forced, risk management.
Is there anything that you can do as a single individual to turn on that type of forced risk management?
Yeah, put it on yourself, right? Put it on yourself. Say, hey, this is my loss limit, right, for the day. If I lose that amount, I'm done, right? This is my loss limit for the week. And same with also having profit targets, right? Because if you don't have a target, what are you working towards? How do you know you're going to get there? And then when you get the profit target, be disciplined enough to say that's enough. I don't have to sit there and just keep churning it away. Knowing when to stop is a big thing. And that's the reason most individual traders struggle in this business, is because they don't have the accountability, they don't have the consequence system, right? Because if you're trading for a company, there's consequences, right? If your boss doesn't tell you what to do, right? If your boss tells you what to do and you don't do it, guess what's going to happen? Consequences. You could be fired, you could be let go, you be dock your pay. There's a lot of consequences that can happen, and that's how we are brought up. Growing up, our parents are telling us what to do. Then we go to school, our teachers are telling us what to do. Then we go to college, our professors are telling us what to do. And then we get a job, our manager, supervisors telling you what to do. When you're an entrepreneur, when you're a trader for yourself, nobody's going to tell you what to do. You have to tell yourself what to do. And that's the reason most in entrepreneurs, even business owners, small business owners, and traders don't make it, because nobody's going to tell you what to do. You got to tell yourself what to do, and having that discipline and that accountability and a consequence system. An example of a consequence system is, again, please don't get offended by this, but I had a client who was like this, extremely devout Catholic, right? Like extremely devout Catholic. And he kept breaking his trading plan. I'd give him a plan to follow and he just not follow it, kept breaking it. So to him, his religious beliefs were really important. So I created a consequence system. I said, hey, every time you break your trading plan, you're going to donate, say, $200 to like Planned Parenthood or something like that, right? That was enough for him. He's like, oh no, that belief is way more stronger for me. And he never broke his plan again, because there was a consequence attached to that that meant more than breaking his trading plan, taking a quick profit or a quick loss. So you got to set that for yourself in your own life. And then across the board, this applies to entrepreneurs as well. How many people before 2020 used to say, I want to start my own business, I just don't have the time. And for the whole year, everybody was locked. You had all the time in the world. You didn't do anything, even then, right? Because you had no consequence system in place.
Yeah, no, very interesting. I like that story. Um, why don't you tell me a little bit about Live Traders? I'm curious. What do you guys do?
Yeah, so LiveTraders, we started that back in 2015. So I was 5 years into my trading career. I was a successful trader at the prop firm, and I was working for them. I would coach all the new hires that they had, coach them through how I got to where I was. And then in 2015, that firm got bought out. So I hit up my mentor, who's my business partner now. I hit him up. I said, hey, are you going to join the new company that's going to be bought out? He's like, I don't know. I think I'm good. I might just retire, blah, blah. I said, why don't we team up? Like, let me handle like the business part of things. And you teach the people just like how you taught me. And why don't we start this thing? And we started LiveTraders in 2015. That is now one of the top trading education firms out there that people come to. And we teach them the realities of trading, not the sugarcoat marketing stuff that a lot of you see online. Like I get really annoyed with the industry when I see ads like that online. Learn how to make a living with trading. I mean, first year everybody's going to lose money. I think that's why people like us, because we give them the truth. Okay, it's going to be the most challenging thing you've ever done in your life, right? But it's a rewarding business if you do it the right way. But just like anything else, there's going to be a learning curve. So we coach and train traders through that, but then also we show them exactly what we're doing in real time. So like just before coming on the show, I was live streaming. I live stream every single day of me trading. Win or lose, people get to see my account in real time. And the reason I do that is not only does it make me a better trader, knowing that there's people watching, I can't do anything bad, right? It makes me a better trader. But then to them, they get to see what I'm teaching them being applied in real time. And I think there's a great, tremendous value to that, because these days, prop firms don't exist where traders would sit together and trade together. But we try to create that environment online of us live streaming. So some days I lose. And I think that's the best way for people to see me on how I handle myself when I lose. There's a lot more they can learn than watching me make tens of thousands of dollars every day. There's more to learn when I lose. And I think we try to coach them through that.
Wow. No, I didn't know you were doing that. It reminds me of that the GameStop movie thing, right? So that's really
Yeah.
cool.
Yeah. We've been
Um,
doing that since 2015. And that's where we got the name Live Traders. We'll just trade
yeah.
live, win
Okay.
or lose. Let's just let people see it.
So what's your approach to mentoring these aspiring traders? Like how long does it take for somebody to gain a so-called education before they're confident enough to even start trading? And then part two of that is maybe even take a shot at making a living at it.
Yeah, so I mean, most people can start trading like right away. But when I say right away, that doesn't mean you start risking your money right away. You start with a simulated account, you start with a demo account, kind of learn how to place your orders, how to get in and out of a trade, get in and in, out of it, like learn the platform first. But then when you learn the platform, you don't need to wait too long to start rating real money. You just got to risk small amounts of money. And I think a lot of people have this misconception that, if I buy stocks, I'm going to lose all of it. No, you can determine exactly what you're going to lose. Example, let's say you get into a trade, you're like, I want to lose maximum $100. I don't want to lose more than that. And let's say you buy the stock at $100. So now you know that if it goes down to 99 and you want to get out, that's your loss point, then you know you're going to buy 100 shares. So if you buy 100 shares, it goes down to 99, you get out, you're going to lose exactly $100 that you already planned for. So we teach people how to start with even as low as like $10 risk, right? Just buy 10 shares, right? You buy 10 shares at $100, it goes down to 99, you get out, you lose $10. Big deal. Start learning with the small money, and then you earn the right to risk more money. So as you gain consistency, you give yourself a target. I'm going to risk $10 per trade. When I make $200, then I can go to $15 a risk. And you slowly work your way up. Typically, it takes at least, what I've noticed from at least my students, it takes about a year for people to fully get to a level where they're making anything substantial. Because the first year is going to be extremely small amounts of money, make $20 here, $30 here, because we're only trying to build your consistency, and you're getting your psychology to adapt as you scale up, because you never want to scale up from here to here. Your psychology and your mindset is not prepared for that. So when you see your swings in your account, it's going to do something to you psychologically. So we got to stair step your way up, and typically that period's about a year. But the learning part doesn't take that long. We have our course. It is a long course. It's 20 hours of video lessons. It's a 600-page manual, but that's got everything you need to know from A to Z of the markets, from beginner all the way till advanced. And most people can finish that course in like a weekend, right? People spend like Friday, Saturday, Sunday. They finish the 20 hours. Now they got the information. Now the whole year is going to be about you applying it, asking questions, tweaking it, optimizing it. But yeah, some people get it really quickly. But for most people, I would say it's about a year mark before they truly get to any level of to even talk about.
Okay. If you were to give a brand new person some advice on how to get started, what would it be?
First thing is you got to determine what style of a trader or investor you want to be, because as I said, not everybody's cut out for day trading. It's just not. It's the truth. So you got to determine based on your psychology, how good do you feel when you watch stocks up and down every day, What's your personal mindset like? Are you more of a, hey, I would rather get into a trade today, get out of it next month, next year? Or am I cut out for being in front of my computer every day and doing this short term trading? So, first thing is determining that and your time commitments. So, like a lot of people that swing trade with us, they have already have a job. They're doctors, they're lawyers, but they can take a trade, here and there and hold it for a week or 2 months. That they can do alongside their job. So, that's great, right? Day trading is for people who either don't have a job, right? This is their full time thing they want to learn how to do, or they live in the West Coast or a different time zone, like a lot of our students, where they actually have a job, but they'll trade in the morning from like 6 in the morning to like 8 in the morning. They'll day trade and then they'll go to their actual job, which is a great way to do it because then you already have an income coming in from the job. So it doesn't put pressure on you to make your living from the trading right now. Whereas somebody who quits, their job and goes to day trade full time, now you don't have any income coming in. Now you got all this pressure at you to make a living from trading, and that's going to cause you to make incorrect decisions. So, to answer long question, but the answer is learn what first determine what kind of psychology you have, what kind of time commitments do you have, and also the money you're coming into the markets with. The FINRA regulation says for day trading you need to have at least $25,000. So if you have less than 25, well, you can't day trade. Focus on swing trading, focus on investing. If you have more than 25, and I would say more than 30 really, then you can come into and take a shot at day trading.
Okay. Are there any mindsets or particular skill sets that you find in your students that you can kind of see that point towards the more successful?
So a lot of our successful students have either been like ex pilots, ex poker players, engineers, IT guys. They make for really good, and doctors. They make for really good traders just because when you give them something to do, they just do it, right? The hardest people are like entrepreneurs and business owners because we always try to find a different way. There's a faster way to do it, and that's just the mindset we're cut out with. Whereas in a pilots are so good with like checklists, right?
Sure.
No matter how many times they've flown the plane, every single time they'll still go through the checklist, and that's what a good trader does: is go through our pre-trade checklist every day. And then engineers also make for good software engineers make for good ones too because well so as software if this happens then that, right? If this then that scenarios. With traders it's the same thing. If this happens we get out, if this happens we take our profit. So they're very good with following their plan. I think the hardest one are like business owners and entrepreneurs because we're rebels. We try to do it our own way. We try to find a better way. And again, it can be learned, but it's much it takes a little bit more time to work on the psychology of that.
I could see that. I think most entrepreneurs are eternal optimists, right? We're always trying to think that we can turn the best situation out of those types of things. So, yeah,
Yeah.
I can definitely see checklists and that type of mentality. Looking ahead, what do you see merging trends or anything different in the way things are being traded in this space?
Yeah, I think obviously we're seeing a lot of we saw an influx of retail traders. So back in the day, hedge funds pretty much caused the market moves, and all of them, the softwares that they had, they created a lot of these market moves. But now, since 2020, there's been an influx of retail traders. So that's caused a lot of opportunities for smaller investors like us because back in the day, we wouldn't have the money to purchase these expensive trading softwares, right? We would have to call our brokers to place the trade, or we would have these outdated softwares that used to cost thousands of dollars a month to be trading on. Now the playing field is completely leveled. You have access to the same softwares that institutions do for like $20 a month, and some brokers even give it away for free with an account. So the playing field has been lowered, it's leveled, and individual traders have the same advantages, if not more actually. Individual traders actually have more advantage than hedge fund managers, despite what people think, because hedge funds cannot turn on a dime and decide to get out of a position. They got billions of dollars off a stock. They can't just be like, all right, I'm taking my loss, I'm getting out of it here, and just dumping billions of dollars because they're going to cause the markets to fluctuate. Whereas individual traders like you and me, we're getting out of our shares. It's not even going to cause a blip in the markets. So we can decide on a dime to turn our bias. You know what? I don't like what the stock is doing. I'm getting out. And we could just get out of all of it and get into something else. So we actually have an advantage. We're actually faster and more nimble than hedge fund guys because for them to wind down a position takes months or years to completely sell off their positions. So I think that's the trend that I'm seeing is that hedge funds and money management firms are going to start to go down more and more, and people are going to start to take control of their own finances and start to do it themselves. Because if you really take a look at the hedge funds, 90% of the hedge funds underperform the market. You're better off just buying the S&P yourself and getting a better return than most hedge funds. Because the hedge funds not only will they underperform the market, but then they're going to charge you a fee on top of that. So you're actually getting less money. And I think that's the trend that I see, is that more people are going to stop moving away from the funds and learning how to do it themselves, and not having to give the hedge fund managers those fees and those profit shares.
Well, I think it's also accessibility, right? I mean, 20 years ago, could you even go on the internet and start opening an account and trading? I mean, you'd always have to go through a third party, right?
Absolutely, and the softwares are just as fast, if not more faster than like back in the day, people would have servers outside the stock exchange to get the fastest execution on a trade. But with traders now, we have the same exact tools on our phone, right? On our phone. Like I was in Portugal last month, and I was in a position, and Tesla finally went up, and I was on my phone and an Uber, but I was able to just click, 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 exit the position right out of my phone. And I think that was not available beforehand. I think so. These are all things that are going to make it more accessible for people. And now they're talking about making the stock market 24/7. I hope they don't do it, because I'd never get any sleep. but but they're trying to do that now, which is going to make it even more accessible. So the people who have a job, they can still come home and still do all those things that they want to do.
Right, right. Why don't you give me the top 5 things that you would recommend for success in trading?
I think the biggest thing, which applies not just for trading, but like all across the board in your life with entrepreneurship as well, is like being a person of integrity, being a man or woman of integrity, which is do what you said you're going to do, and then do it when you said you're going to do it. I mean, just think about how much our quality of life would be better if we did every single thing we said we're going to do, and we completed it when we said we're going to do it. That's the biggest thing. With trading, investing is the same thing. A lot of people say, yeah, you know what? I should be investing. I should be getting into the stock market, but they never do. Or yeah, next year I'm going to start to invest, and then they never do, right? Or I'm going to get out of this position when it gets to $100. Now it's at 100. Maybe it'll go higher, right? Or if it goes down, rather than getting out, maybe it'll come back up. So you have no integrity. You said you're going to do something, and now you're not doing it. And entrepreneurship is the same way. So many people, as I said earlier, in COVID, they would say, "Oh, I want to start my business," and now for a whole year you had all the time in the world and you didn't do anything. So the only way to move the needle in your life, to make progress towards your goals, is to take action. Like one of the goals that I had was, I want to have Airbnbs, I want to have rental properties, I want to have all these things. But if I never bought the first one, I would never have the ninth one. So you got to do it. You got to set deadlines on things. You got to set calendars on things. You got to have a goal. You got to measure your progress. You got to do all those things to move the needle in your life.
Okay. So that would be so integrity is one thing's on the top 5. What other can you bang off maybe 4 more?
Yeah, the other couple I would say is like, don't get stuck in the learning loop. The learning loop is what I see a lot of people stuck in, which is they move from one concept to another, one shiny object to another, right? They might listen to this podcast and they might go watch another podcast. They might read one book, then they go to another book. So their mind, they're feeding themselves that, oh, I'm doing something, I'm learning more. But your life doesn't demonstrate you doing any of that. So rather than moving from one book to another book, or one podcast to another podcast, hey, what can I apply just from what I've just heard? So I talked about integrity. We talked about taking action, not getting stuck in the learning loop. We talked about getting involved in the stock market. Now, before you move on and read another book or learn more information, why don't we execute? I think taking action, executing on your what you've learned is the biggest thing. Because so many people brag these days. I read 10 books this month. I'm like, but your life doesn't demonstrate any of that. Of you haven't taken action on any of what you've read. So you don't have knowledge. You just have a lot of information. And a lot of people have a lot of information, but true knowledge is applied knowledge, and when your life can demonstrate that you've applied it. So that those are the couple of things that I think can move the needle in anybody's life: is taking action, not getting stuck in the learning loop, having deadlines, and scheduling those things, scheduling the things that are important to you in your life. So I schedule every single thing, right, from my trading to being on this podcast to recently I've been starting working out. That's going to be scheduled. When I want to play golf, go to the driving range, that's going to be scheduled. Or if I want to work on this part of my business, team call has been scheduled. So I go from schedule to schedule to schedule, because I know if I keep doing that, the needle's going to keep moving forward and forward in my business and in my life.
I think that's a consistent theme. I've interviewed a lot of successful people, and I think the most successful already know what they're doing tomorrow. By the time they go to bed, they've already written it down. It's all scheduled out in their calendar, including reading the paper, taking the dog for a walk, and working out.
Everything, yeah. Because if you want to, like I think Jordan Peterson talked about it, you schedule what your ideal day should be like, right? What is the ideal day that if you did that day, you'd be super happy with yourself? Great. You wrote that down. Great. Now schedule exactly those things, and you're going to have that ideal day the next day. So, one of the things that in my success journal that you're going to see here, success journal is a journal that I created that actually walks people through that, because a lot of people don't journal. They buy a journal, they don't know what to write on it. And most entrepreneurs don't, right? It's another job writing a journal. So, this is like a journal that you takes like 2 minutes to fill out in the morning, 2 minutes in the evening. So, and one of the things in that journal that I do, and again, you can do that on a piece of paper. You don't need to get the journal, but you can write down what are the 6 things. I call it the critical 6. What are the 6 things that you do tomorrow that are going to move the needle in whatever part of your life you're trying to move the needle in? But you write that the evening before. So when you wake up, you're not running around figuring out what am I going to do? What's today's task list? Those are the 6 things. And I don't add anything new to my plate until I've done those 6 things. Those come first before anything else. So first I do those 6 things, and then I can think about if there's an additional time to do anything else. But if I keep doing those 6 things every day, I mean, at the end of the month, I'm way far ahead than a lot of people that are still thinking about when they wake up, what am I going to do today? I don't want to do that. I planned it the night before, and that's part of the journal is in the evening, you write down 6 things that are going to cause them a needle in your life. And then next morning, that's your only goal is just do those 6 things.
Amazing. No, I practice that as well. And like I said, most successful people are doing exactly that. So
Yeah.
before we cap this off, I'd like to ask you a question. My guests know, or sorry, my audience knows that I always ask this question of all of my guests. So this is the Investing to Win podcast. How do you define success, and what does winning look like for you?
So my definition of success has evolved and changed over time, but the way I define it now is having success in all areas of your life, health, wealth, love, and happiness, and having harmony within those areas. And more importantly, you personally, deep down, being okay with where you're at in each of those areas. If you're happy with where you're at in each of those areas, that is what I consider true success. Because for the longest time, my definition of success was financial success. And then I got there. But what good is financial success if your relationships are a mess? You can't even get along with people, right? What good is it if your health is a mess? Is that really success? Probably not. So now it's like about having harmony in all those areas, and more importantly, you personally being comfortable with where you're at in each of those areas. I think that is true success to me.
Well said. Well, great place to stop. Thanks so much for enlightening our audience about your system, your company, and just I like the mindset stuff. I mean, I think that's not only for trading, but business in general and in life.
Absolutely. I think that's the foundation of anything.
Yeah. All right. Well, thanks for stopping by, and we'll put everything into the show notes so people know how to get in touch with you.
Awesome. Thanks for having me. It was great chatting with you.
All right. Thank you.